G'day legends and welcome back to another video. I hope you're all having a fantastic day. As the month goes on, Bitcoin is looking more shaky, moving towards a danger zone, which is the 50 EMA and Gaussian channel upper band. Historically, the breakdown of these two levels on the weekly chart have led to prior bear markets. In today's video, we are going to be discussing exactly what needs to happen to validate the next bear market and to potentially avoid it. What will Bitcoin need to do to continue back upwards? How the upcoming interest rate data, inflation data, and even the Federal Reserve press conference may go to push the price upwards or even act as a catalyst for a correction. By the end of today's video, you'll have a detailed understanding of the macro charts from a technical and a structural perspective, but of course also understand what we are watching on the short term, how the short term price is developing, and exactly what the buyers will need to do to push the price higher. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information, no hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin, or checking out these links for more information. Let's go ahead and jump on in. So taking a look at Bitcoin over the last 24 hours, we actually saw a little bit of push toward the upside as the RSI did not manage to break that uptrend, representing momentum remained positive, and we pushed through this point of resistance at 109.5 into this upper point of liquidity, this upper point of resistance at around 111,500. This rally came as a consequence of the potential for the Federal Reserve to actually discuss Bitcoin tomorrow, which, quote, is bridging traditional finance with the digital asset ecosystem. The potential for discussing Bitcoin in a positive light, or cryptocurrency in a positive light, gave the market a little bit of push upwards. Again, anytime we see this positive discussion of cryptocurrency, or what is assumed to be positive discussion of cryptocurrency with the traditional finance system, that goes to only strengthen the security of the asset and the perception of the asset in the public eye. And of course, when people are more confident in an asset, the asset price is generally driven up because, again, the market moves on perceived systematic risk. So the perception of assets are very important when it comes to the overall performance of an asset on the short term and long term. Now, the market has front run this by pushing up into resistance. We can see a little bit of short term turbulence here, pulling back on the short term with some bearish momentum developing and a breakdown in the RSI, suggesting maybe this rally will not sustain and will come back into support. But nevertheless, this is going to be an interesting meeting, as it will either go to verify and further validate cryptocurrency as a secure asset which should be in our traditional finance system, or could demonize and villainize cryptocurrency as one that is not quite ready to be integrated, and therefore we could see the market pull back. So it is going to be quite interesting to see how they discuss it and what kind of tone and narrative they take on the cryptocurrency market. Moving over to the rest of the market, the total cryptocurrency market, guys, and liquidations and volume, we can see volume over the past 24 hours is up 11%, 275 billion over here. Liquidations up 54%, 400 million. Of the 400 million, pretty split between longs and shorts, 205 and 229. So again, we're seeing some upward movement, but the market is still quite split on the short term between longs and shorts. We're seeing quite a fair bit of chop with that movement. Overall, in the short term, like we just mentioned, we are still seeing weakness in this rally. We have not cleared through one of these prior lower highs, so we're still coming into points of resistance, even with this recent short-term push. We'll discuss this more in a second. Recent and upcoming economic news, we of course have got the CPI data and inflation data. This is, or should I say, core inflation and just base inflation. Very, very important, guys. Again, this is going to kind of give the Federal Reserve a bit of an understanding of how the market or how the economy has reacted to the prior interest rate reduction. If inflation starts to trickle upwards again, the Federal Reserve are going to be more hesitant to pull back interest rates. And of course, we know already if they take a more cautious and uncertain approach, the market may see that as a net negative and it may correct. However, this is very important. This could act as a catalyst to push Bitcoin upward from here and push the stock market upward again. If inflation data comes out positive, meaning it hasn't moved much, it didn't go up much, it's holding relatively flat, the Federal Reserve is going to be more likely to drop interest rates. And we know already dropping interest rates has a net positive effect on the risk asset market, as again, it facilitates acquisition of cheaper debt as debt to service ratios decrease, and it facilitates increased available household cash flow and retail spending of assets, and assets increase in value. So something to pay attention to. Now, with that being said, the interest rate and inflation predicament could also be a catalyst for the price to come back. If inflation has jumped up too much, we would know the prior interest rate reduction has had too much of an impact on inflation, and the Federal Reserve will likely not drop interest rates, take a more pessimistic approach, and the market will perceive that to be negative, and the market will continue this downward move. Pay attention. Let's go ahead, guys, and jump into Bitcoin. Let's just quickly take a look at the S&P 500. Not too much happening. We've seen a whole lot of invalidation of this uptrend. Very interesting to see. We're still watching the 50 EMA, watching our 50 EMA very carefully, and our prior local high. Really what happens between these two levels is going to decide if we're going higher or lower. Lose a 50 EMA, expect further corrections, break this uptrend. This becomes invalid, and we expect moves to 7,000. Pay attention to that. Let's go ahead and jump into Bitcoin. Before we do, go ahead and sign up to BitGet, BitUnix, and BingX. Exchange links are down below. You'll get a lifetime trading fee discount of 15% of all your trading fees. That can build up to 45% based on your trading volume. You'll support me making this content on a daily basis, and you'll support yourself in your trading journey, trading where I trade and where I trust. Go ahead and check it out. We'll play an ad and we'll get right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, you legends, let's go ahead and get into it. So we started the video with a bunch of economic data there, a bunch of news and the charts. We're not going to go over it again, but I do want to really emphasize, if you did not watch the intro, just go ahead and check it out, because we talked about the upcoming meeting with the Federal Reserve in regards to traditional assets, bridging with the digital asset system, and of course the inflation and implications that has had. We're not going to go over it again. Very important stuff, because it's going to essentially drive the market. We've talked already how policy determines demand, and that is very, very real. Policy drives demand in the market. If policy becomes bearish or uncertain, we see demand drop. If it becomes bullish or it reinforces security or reinforces integrations of these assets in traditional systems, that is going to be a net positive, and the market will perceive that bullish, and the market will rise as a consequence. So we have a lot of catalysts moving into the end of the month. Of course, this is happening over the next 24 hours. We've got the CPI data happening on the 24th. And if we zoom out and go down to the 30th, we've got the interest rate decision. So in the next 9 days, we have got some major news events which can massively change or confirm the direction of the market. So let's talk about that. If we're taking a look at the macro cycle, this is going to be the 4-year cycle, guys. If we take a look at the 4-year cycle, this is going to be on the weekly chart. The weekly chart has very much shown us a few patterns that have played out in the past. First and foremost, starting on the monthly chart, we had that classic 1064-day bar theory. We went through all of the mathematics over here, all of the probabilities, discussing why the 6th of October would be the top according to the 4-year cycle. Simply put, if we take the average days from all prior cycles, 11 to 13, 15 to 18, 18 to 21, and we look at the average amount of days. The average amount of days using a monthly pivot point takes us to 1,064 days, which was the 6th of October. According to our probabilities, if you look at the probabilities, if we come down over here, we can see the most likely point of when we can assume that the 1,064 day bar theory breaks would be a top occurring after two standard deviation ranges, which are standard deviation ranges around 5.8 days, which is after the 29th of October. So if we see a new top occur for Bitcoin after the 29th of October, this pattern we have seen play out, the 1,064 day pattern, the 1,064 day pattern with a 365 day long bear market, will likely come to an end. It will break based on historical data. So we either have two scenarios. Number one, we end up breaking that 4-year cycle and we continue up eventually to new all-time highs, confirming after the 29th of October, okay? And the 29th of October is an important date because if we look at the 29th of October, that is essentially going to be around about that interest rate decision and it's going to be after CPI. So there's still some catalysts which could push the price up or confirm the pullback. And if we take a look, of course, at this chart here, if we do not do so, if this was the top according to the 4-year cycle, we may be running the risk of entering a bear market. So let's take a look at what historically has triggered a bear market. If we look at the weekly chart, we can see from a weekly perspective, every single time we see the loss of the Gaussian channel upper band and 50 EMA, we enter a high time frame bear market. This high time frame bear market generally lasts around 365 days. You can see here again, down, and you can see in the current one, we run the risk of doing that yet again. If we lose a Gaussian channel upper band and 50 EMA, if we look at where we are currently, we are only sitting around about 8 to 9% away from that level. That level is sitting around 100,000 to 98,000 US dollars for Bitcoin. So pay attention to that level. If we're taking a look at the macro chart again, if we're looking at the 4-year cycle, ideally the 4-year cycle does remain intact because again, it is a vast repertoire of historical price action which has played out near perfectly every single time. So it forms a good basis to project or expect how the price will continue to play out. Remember, when we look at cycle trading, it is not predictive by nature. It is diagnostic. It is not used to make decisions on. Rather, it is used for confluence, for probabilistic decision making. So it's not to sit here and say, this is going to happen. It is based on historical data, this has happened, and therefore we'll see this pattern play out again. It may continue to happen, and therefore we can kind of review the market with that context and then go to make decisions using that as confluence. So pay attention to that, guys, something to really watch. Historically, the breakdown of these levels have resulted in bear markets, but then we have that conflicting data, which is if inflation is good and interest rates continue to drop, well then from a market mechanism perspective, we shouldn't really see a bear market. We should in fact continue to see the prices rise. So that does create a bit of a juxtaposition there between how the market is developing. From a structural perspective, it is looking bearish, but from if we look at an economic perspective, the potential for economic growth for the risk asset market is actually still there currently. We are moving from a period of, I guess, euphoria, which was when ETFs were being approved and then interest rates were dropping over here, okay, into now more uncertainty, with uncertainty around tariffs, with uncertainty around inflation, with uncertainty around interest rates. We're seeing more uncertainty develop over here. Now, sometimes uncertainty can be pausing periods where we then see that uncertainty eroded and the price action continues, or sometimes uncertainty can actually be reversal points where the economy is starting to plateau and then we see these reversals in these trends. So that could also be a negative for the market. So again, we have to wait and see how that data develops. From a structural perspective, the weekly chart is bearish. There's no doubt about that, guys. We have got momentum telling us we have got negative momentum. We are underneath the RSI here, breaking down for a yearly long symmetrical triangle pattern established from the highs and lows of early 2025. We can see, of course, we are underneath the bull market support band on the weekly chart, and we have confirmed deviation from the weekly range high with the breakdown of the weekly candle. This is a bearish chart by all means. But for Bitcoin to enter a bear market based on historical price action, we still need to drop lower. So while we have not done that, the potential for reversals is on the table. We need to be aware of that. The potential for reversals is on the table. Let's talk about first and foremost what would need to happen for us to be 100% certain there is going to be no reversal. For that, we would need to see the loss of this level in the RSI. Again, the loss of this low on the RSI, you can see here prior times we have bounced on this level. Every single time we have bounced on this level, we have seen a reversal upward for the market. It's going to go draw them out from here. Every single time a reversal up for the market, that will line up with the 50 EMA and Gaussian channel. The loss of that level would mean we break below the Gaussian channel 50 EMA, resulting in corrections around 88,000 for our first target. That would be the bearish scenario. Let's move over to the short-term price action. Short-term price action over here, guys, not looking amazing yet for Bitcoin. Again, if we zoom to the hourly here really quickly, you can see that we do have an uptrend developing from these lows. The RSI of that uptrend has broken down, which means we have got negative momentum, meaning this uptrend has technically exhausted. We will expect corrections into the break of structure, 109.5, and potentially into this uptrending support line, where we will either then bounce and continue or break into our sell side liquidity. Depending on how the upcoming news develops, which is going to be the Federal Reserve discussion in talking about finance and digital asset ecosystem integration, will massively impact the direction of the short-term price action. So pay attention to that. But in terms of triggers, losing this uptrend, expect corrections. Will remain above the uptrend. There is a chance of bounces, but first expect a pullback into support before we see that. If we want to see the buyers fully reclaim control, of course, very simply, we need to do two things. Number one, we need to get out of the downtrend we have been in since the top on the 6th, meaning this diagonal downtrend needs to break. And number two, we need to clear a prior lower high on the higher time frame, which is going to be 116,000. So until that happens, I'm not confident in higher time frame reversals. If we see that happen, we are going to be expecting continuations back into these highs. Until then, best case scenario, we bounce around, we come back down, we enter this 100 to 98,000 region. Eventually, this trend line will break. When it does, we could see reversals again, etc., etc. But that is something to talk about another day. Until then, simply trusting the trend. We follow the trend until it ends, and we're watching momentum develop through these short-term bounces. And every single short-term bounce we've had over here, people have said, okay, this is it. We're going into a macro reversal. We're going back up. The reality is momentum has been telling us in every single one of these bounces that we had not had enough buying pressure to sustain the trend. The same thing is showing up, beginning to show up over here again. So pay attention to that. The only thing I see that can save this chart right now is the potential for these events, these economic events, to act as catalysts to drive demand or to force demand back into the cryptocurrency market, which will very likely result in full-blown reversals. But by doing so, we would inevitably break the 4-year cycle, and that would be a net negative for the predictability of the macro cycles for Bitcoin. So it's kind of like a lose-lose. Number one, we break the 4-year cycle, we lose the predictability of the 4-year cycle. And number two, we enter a bear market. So, you know, you have to kind of pick and choose a little bit of there of how it goes. Let's move over to the total cryptocurrency market cap and wrap up the video. If we're looking at good things over here, again, the total cryptocurrency market cap, a fantastic tool. Holding on, 3.65, this does give me hope. The 3.65 level needs to hold. If we lose 3.65, we are going much lower. The entire market's correcting. Provided we can hold here, there is hope for reversals. That is very much clear based on what the total cryptocurrency market cap is telling us. We need to watch to see how we hold on here. If we hold here, it is good. If we close a weekly candle below, that is going to be confirmation for further continuations. I believe by the end of October, we will have a very, very clear understanding of where we're going to be moving for the rest of the year. I truly believe that. If we take a look at Bitcoin, again, we turned bearish up over here when we saw that bearish divergence. We saw the deviation. We were expecting corrections. This trend has been bearish the entire time. We would be remaining bearish because, again, we didn't turn bearish here. We didn't start shorting over here. We've been bearish and shorting from these levels over here. So even if we push back up here, we've already taken profits. There's insurance we can pay to remain in those trades. That is something you have to pay attention to, of course. So watch the trend, trade the trend, pay attention to the upcoming economic news. I think this is going to play a massive role in impacting the price action, particularly over the next few days. So if you do not like trading news events, I would kind of scale out. I would be a little more cautious about entering positions. I kind of wait for this to fade, at least wait for this one to fade. Then we've got around about 3 or 4 days until inflation. Then after inflation, about 6 days until interest rates. So there's some time between there, but wait to see how that develops if you do not want to trade news events. Thanks for tuning in. Have a fantastic rest of your day. We'll catch you guys on Thursday to discuss more. We'll see you then. Bye.